Despite today's declines, markets have made a really strong comeback from the April lows. But the tariff back and forth lately is leaving some to wonder if negotiations worsen again, which stocks will be safe. Could any be relatively immune even to the effects of trade policy? Well, here's a hint at a couple of them. Our next guest thinks will be. Skylar Weinand is Chief Investment Officer at Regan Capital. Haven't heard MSG in a while. Skylar, welcome.
Thanks for having us on.
Talk to me about that one, Verizon, and more broadly. I mean, does it even excite you to get into these names, or do you just think, no, you got to stay in like the risk assets and let the market be off to the races?
I think staying in yield, high yield companies like Verizon, holding pattern here, kind of waiting out the storm is a great idea. Two New York-based companies, Verizon and MSGS, which owns the Knicks and the Rangers, amongst other assets. Just great place to hold out, completely undervalued. But let's take a look at Verizon first. Almost 6 times the dividend yield of the S&P, about a 6.6% dividend yield, 2% dividend riser per year, sub 10 PE. So really an anathema versus Mag 7. And if you want to play that value story versus growth, this is one of the best places to hang out. U.S.-based company. Both these companies are based in New York City, and almost completely United States-centric customer base.
I'm going to ask about MSGS, but MBS was another place we could have gone with this argument. Just real quick, so you're basically looking at yield plays then, aren't you? Which is ironic because we're in a situation where you can go, I don't know, I can just get Treasury bills for like 4%. I can get the 30-year for 5% these days.
Right, but the Fed may cut here, call it September and December. You're going to very quickly see a 3 handle on Fed funds rate. And that $7+ trillion in money markets, 4 1/4 is kind of like 5, but 3 3/4, I think folks are going to run for the exits and start looking for 5 or 6% yield, whether it's in bonds or dividend paying stocks.
Yeah.
We love mortgage bonds that offer high 5s right now for government guaranteed protection in Fannie, Freddie, and Ginnie Mae bonds.
We'll keep buying them so we can get those spreads down. Just a final quick comment then. Why MSGS? What's the dividend yield there?
None.
None.
Earnings stink. Dividend yields stink. But you're looking at a $5 billion company with assets that are worth at least 10, if not $15 billion. The Lakers just traded for $10 billion. You get the Knicks, you get the Rangers, you get esports, you get a bunch of minor league teams. Put that all together for $5 billion sounds like a tremendous play, especially with all the hubbub around investing in sports lately.
No, I always find it so ironic that in the private markets, these things trade like pieces of art. Then they go public and like no one wants them. You know, it's just, we'll see if that changes as the asset class keeps maturing. Skylar, thanks for bringing our attention to all of it today. Good to have you on.